Gold just ripped 2% higher in a single session. While you were sleeping, XAUUSD tacked on $92, smashing through short-term moving averages and now sitting at 43.31. But here is the trap that most retail traders will walk straight into this morning. The weekly trend is still a sell. The daily trend is still a sell. And price is now stalling directly below the 200-day moving average at 43.50, a level that has rejected every single bounce since the sell-off began. One danger zone, one hidden opportunity. I'm about to show you both. Stay to the end, because I'm giving you 3 exact levels you can trade today, with stops and targets that the institutional desks are watching right now. Write this number down. The line in the sand for the entire session is 43.50. If gold closes a 4-hour candle above 43.50, the daily sell structure begins to crack, and a squeeze toward 4400 becomes the base case. But if 43.50 holds and we get a rejection candle, the free fall back to 42.89 support will be fast, violent, and it will trap every late long that chased this 2% pop. This is the level that separates winners from losers today. The herd is positioned heavily short. By the way, speculative shorts had piled on during the sell-off, and this peace deal headline forced a panic cover. That means we are in a short squeeze environment, not an organic bull trend. When short covering runs out of fuel above resistance, the vacuum backdown is brutal. That is why 43.50 is everything. Now look at the weekly chart for context, because this is where the fear architect reveals its hand. The monthly trend remains a strong buy. Long-term gold bulls are still in control, and the macro backdrop of war risks and sticky inflation is not going away. But zoom in to the weekly and daily, and you see a different picture. The weekly trend is a clear sell, with price below the 20-week moving average at roughly 4400 and the 50-week down near 4563. The daily chart is even more aggressive to the downside. We have a daily sell signal with the MACD deep in negative territory at -105, RSI at 42 and struggling to reclaim 50, and the 20-day moving average sloping down at exactly $4,400. So this 2% surge is a counter-trend rally inside a medium-term bearish structure. Most traders miss the fact that the 200-day moving average sits at 43.50, and it is currently acting as a brick wall. The last time gold tried to recapture its 200-day, back in early June, it failed and dropped $120 in 2 days. The time before that, same story. This is where the bear trap transforms into a bull trap, or a genuine breakout. Come down to the 4-hour chart and you can see the hidden divergence that the algorithm traders are exploiting. The 4-hour MACD has been ticking higher even before this 2% surge, building a bullish divergence on the histogram, which is exactly why the short squeeze ignited so easily. But that divergence is now almost fully unwound, and the fast line is approaching the zero level. If the MACD reverses at zero and rolls over while price tags 43.50, you have the textbook set up for a failed breakout and a sharp leg lower. That is the danger. On the flip side, a clean 4-hour close above 43.50 with the MACD crossing into positive territory turns this into a trend change. Right now, the 1-hour chart shows a sell signal. The 1-hour trend flipped back to sell at this morning's high, with stochastics curling down from overbought and the price teasing the pivot point of 43.09. This is the micro battle. The 5-hour trend is neutral, telling you that momentum is not sustainable yet. The ADX reading is 51, screaming that whatever move comes next will be fast and extended. That's the kind of environment where the right entry prints reward ratios of 3-to-1 and better, but the wrong entry blows through your stop in a single candle. So you must be precise. Now let me tie this technical web directly to the fundamental driver that sent gold screaming higher. In the last 24 hours, news broke that the US and Iran are nearing a formal peace framework, which the market interpreted as de-escalation that reduces energy supply risk and eases inflation fears. Lower inflation expectations typically kill gold's bid, so that part of the rally is absolutely counterintuitive. The real driver is the dollar. The peace deal dented the greenback aggressively because lower geopolitical tension reduces safe haven demand for the dollar, while also making the Fed's job easier, potentially pulling forward rate cut timelines. Gold didn't rally because of the peace deal. Gold rallied because the dollar got hammered. That distinction is mission critical. When a commodity rises purely on dollar weakness and not on its own intrinsic demand, the rally tends to be fragile unless the dollar continues to weaken. The dollar index is now testing a key support zone. If it bounces, gold gets smoked. That's the cross-linkage you need to watch. The gold to real yield correlation broke momentarily, but it will reassert itself when the dust settles. Gold is also moving tick for tick with Bitcoin's relief rally, and with S&P futures grinding higher. This is a risk-on short squeeze across the board. The problem is, the VIX is still elevated, and equity breadth is narrow. The moment equity futures roll over, gold will lose its liquidity blanket and correlations will spike. Analyst sentiment has flipped overnight. We had a deep gold sell-off that many called overdone because inflation and war risks remain structural. That sentiment gave the fundamental floor under this bounce. But now the same analysts are cautious. The sell-off may be overdone, but this 2% spike may have just priced in all the near-term good news. The next macro event is tomorrow's final GDP revision and weekly jobless claims, which will either reinforce the dollar slide or trigger a snapback. My directional lean for the next 1 to 2 weeks is that gold will resolve this consolidation between 42.89 and 43.78 in a decisive fashion, and I lean toward a downward resolution unless 43.78 is taken out. That number invalidates the entire weekly sell structure and would force me to flip long targeting 4400 and then 4560. Do you think gold closes the week above 4350? Comment yes or no right now. I'm tracking consensus and I'll call out the herd bias in tomorrow's video. Now we get into the section that most people skip, and that's exactly where the money is made. Keep watching. I'm about to lay out 3 trading strategies with exact entries, stops, and take profit levels, designed for different risk profiles. If you want to screenshot these plans, they will appear on screen right as I talk through them. Every level is precise, every risk-reward is calculated, and every invalidation condition is spelled out. Strategy 1, the sniper, conservative. The conservative play is not to chase this melt-up. The sniper waits for exhaustion at the 200-day moving average and sells the failure. Here is the exact trigger. If gold pushes up to the 43.53 resistance zone, that's a 2, and prints a clear 1-hour bearish rejection candle, like a long wick shooting star or a bearish engulfing, you sell the close of that candle. Your entry is at market on that bearish 1-hour close, roughly 43.50 to 43.53. The stop loss goes above the swing high and above the R3 pivot of 43.78. So place your stop at 43.82. That gives you roughly 30 points of risk. Take profit 1 is the pivot point at 43.34, which is 20 points away, and take profit 2 is the area just above the daily support 1 at 43.09, which is 44 points. That delivers a risk-to-reward ratio of about 1 to 1.5 on the conservative side, but if we extend to 43.09, that's 1 to 1.5 as well. Actually, let me be exact. Risk is about 30 points. Target 1 is 20 points giving 1 to 0.7, but target 2 is 44 points giving roughly 1 to 1.5. The full move to yesterday's low near 42.89 would be 1 to 2, and you could set a trailing stop once target 1 is hit to lock in that ratio. This setup is completely voided if gold closes a daily candle above 43.78. In that case, the bearish structure is broken and you must exit any short bias immediately. The sniper never fights the break of weekly resistance. That is your plan. The sniper. Conservative, entry, 43.50 to 43.53 on 1H bearish rejection close stop loss, 43.82 take profit 1, 43.34 take profit 2, 43.09 risk, a reward, ~1:1.5, to TP2, invalidation, void if daily close above 43.78 strategy 2, the active trader, standard. The active trader is playing the range between support and resistance with a pullback entry. Here is the setup. This morning surge stalled right at 43.34, which is the R1 pivot and the top of the short-term consolidation. A break above that on a 15-minute closing basis flips the intraday structure to a trending session, but I want to trade the pullback after the breakout. So here is the plan. If gold breaks and holds above 43.34 for more than 15 minutes, and then retraces to touch the 43.18 to 43.22 zone. That's the confluence of the 10-period moving average on the 1 hour and the prior breakout level. You go long. Entry is at 43.20. Stop loss goes below the hourly demand zone and below the pivot point, so set it at 43.08, just under 43.09. Risk is 12 points. Take profit 1 is the R2 at 43.53, 23 points, giving roughly 1 to 2 risk reward. Take profit 2 is the region just below the 200-day moving average cluster at 43.70, approximately 50 points, delivering 1 to 4 on the second tranche. Once target 1 is hit, move the stop to break even and trail the remaining position by the 10-period moving average on the 1-hour chart. This setup is invalidated if price fails to hold above 43.34 within the first 2 hours of the US session and drops back below 43.20. That shows the breakout was a fakeout and the sellers are still in control. Type your gold range for the New York session in the comments now. Let's see who's aligned with the active pivot. The active trader, standard, entry, 4,320, pullback after 43.34 breakout holds, stop loss, 43.08 take profit 1, 43.53 take profit 2, 4,370, trail after TP1, risk, reward, 1:2, TP1, 1:4 plus, TP2, invalidation, void if 1H close below 4,320 within first 2 hours of NY strategy 3, the aggressor, high risk. This is the momentum chase for those who can lose small and manage risk aggressively. The aggressor sees the short squeeze momentum and trades the breakout of the current resistance on a 5-minute time frame. Right now, 43.34 is the immediate barrier. If gold prints a 5-minute candle close above 43.35, you buy instantly with market momentum. Entry at 43.36. Stop loss is tight, placed below the last swing low on the 1-minute chart before the breakout, which currently sits around 43.22. That's a 14-point stop. Take profit 1 is 43.53, 17 points, 1 to 1.2. Take profit 2 is 43.78, 42 points, giving 1 to 3. This is a high-stakes setup. If the breakout fails, you'll be stopped out in seconds. The trade is void if the 5-minute candle that breaks 43.35 immediately reverses and closes back below 43.30. That's a liquidity grab and you do not want to be caught in it. Only take this if your position size is small enough that a stop out doesn't ruin your week. To the aggressor, high risk, entry, 4,336, on 5-minute close above 43.35, stop loss, 43.22 take profit 1, 43.53 take profit 2, 43.78 risk, reward, 1:3, to TP2, invalidation. Void if 5-minute candle closes back below 43.30. Never risk more than 1 to 2% per trade on any of these plans. No positions through high-impact news events like tomorrow's GDP revision. New spikes vaporize stops. Hard stops are non-negotiable. This is how you survive to trade the next big move. Let's close with the single most critical level for the next session. 43.50. Write it on your screen. Set an alert. If gold accepts above that, the narrative shifts bullish and we target 4,400 and beyond. If it rejects, 42.89 is the magnet, and a breakdown below that opens 42.64 and 42.44. Tomorrow's wildcard is the final US GDP print and jobless claims. Any upside surprise in the dollar will be the catalyst that kills this gold rally. I will have the full breakdown on Bitcoin and the S&P divergence in the very next video, live now on the channel. Tap the end screen to watch it immediately. Smash like if this gave you a clear plan today. Subscribe, hit the bell, and I'll see you in the next session before the move happens.